Vinit Sambre joins us. Let's take a conversation forward and understand from him that what is really fueling this kind of a nervousness in the market. Vinit, good morning. Thank you for joining us. Markets are
Hi, good
looking
morning.
nervous. Global cues are strong and supportive. Inflation is speaking out. Yet the way Indian markets have moved this year, it's very disappointing. Why is that?
Good morning, and thank you for having me on the show. So, I think clearly there is some amount of nervousness which has crept in the last few days. And one important matrix beyond so many variables which one is monitoring today is the real fact that last year Indian markets really outperformed. And when we look at the valuations as compared to the global indices, we were actually trading at a huge premium in a way. So I think some of the readjustment has to happen. I mean, there are two aspects. One, internally, what is the developments which are taking place, and also at the other end is the relative metrics where we had some of the other emerging markets like China, which had become quite attractive in terms of valuations, money moving there, people trying to take profit out from here where the valuations are expensive. So I think some of these has caused the valuations or the markets to correct and the valuations to sort of become now slightly more reasonable, if I can say, on the large cap front.
Vinit, when you say meltdown in a group of stocks which are the haloed stocks, which are important, which in a sense have been the poster boys of the bull market. When you see a sell off like this, does that really make the market nervous? Does that break the rhythm of the market? Do you think more than absolute macro stroke valuation factors, now there are technical factors which in a sense could overpower the market for next couple of months, couple of quarters?
Yeah, it is quite likely, given the kind of impact some of these companies have had over the last 1 or 2 years in terms of the market contribution. So I think clearly with whatever developments are taking place, which we are watching how which way it actually turns, will surely have impact in terms of the overall markets moves. But more importantly, what we also keep watching is the long-term fundamental track, which you were alluding to. And these type of events keep happening through time, and just that it has and it does actually coincides with the fact that we are trading at expensive valuation. So you need some trigger for that valuation to sort of normalize, and which is I think what is happening right now. But more importantly, what we are also watching is our long term thesis on the growth and the fundamentals of our economy has actually not diluted because of these developments. And we believe that as the fundamentally strong companies also participate in this meltdown, we would be sort of looking at those names also from the long term perspective.
Started to be, a manufacturing renaissance when it comes to India, and there's a lot of expectation as well from the budget, Vineet. So, looking at sectors like railways, defense, road, infrastructure, do you believe that this calls for a long-term story?
Yes, surely. I think we are quite convinced and positive, on the overall manufacturing theme as such, which includes all of the sub-segments which you just highlighted. And we believe that, in the last many years, India has been talking a lot about some of these changes. But when we think about execution, we have sort of fallen short in terms of the execution overall. But the last 2 years, at least, we have seen good momentum even on execution, as compared to what we had in the past. So that is giving us confidence that some of these segments like railways, defense, overall infrastructure, I think the momentum is definitely going to pick up. Any cities you visit nowadays, it is you will see so much of activities taking place in terms of the infrastructure development, which actually speaks a lot in terms of the execution, and especially given next year is an election year, I think the pace is only likely to pick up in the current year. So we are positive, just that one has to be careful in terms of the valuations as well, because we've also seen the stocks had seen a good rise last year. So probably this kind of market consolidation or correction may bring in some good opportunities out in this segment.
Okay, fair enough. That's the view coming in. But what about your outlook then on new age technology companies? Is that something that you'll completely steer clear from?
So I think clearly investments into our companies are sort of dependent upon their justification for, coming out from their cash generating potentials over the next few years, and some of the new age tech where we still feel that there is a challenge in terms of the profit generation or cash flow generation in the near future. We are slightly more cautious and careful into investing into those, while we keep evaluating these companies are under our radar, but till the time we do not get confidence on those, probably they may not become part of the portfolio.
Good morning, Vinit. Before you joined us live, we did a check, and we saw that the markets are trading flat from exactly a year ago. Nikunj was just discussing that on air as part of his editor's take. My question to you is there anything that Finance Minister Nirmala Sitharaman, in about 24 hours from now, can announce that would move the needle as far as the market? It's not a finance minister's job to worry about stock prices or the levels that stock markets are trading at. But the question is that what can she do that would be received really well by the markets and make a difference?
So I think very practically, if we have to think from the market's perspective, I think budget seems to have lost that much of relevance from really the quick changes to the market that takes place post the budget. Most of the important announcements also are outside the budget. So from that perspective, one thing to sort of keep in mind. The other thing I would say is that during the pandemic, anyways, I think the government and the finance minister, they have done incredible job in terms of how they have navigated us through, where our economy has been one of the relatively the best performing economy in a way. So I think that itself is a good indication of their intent and execution. My only thought from the upcoming budget is that whatever plans the government is laying down, the execution is something which has to be very efficient, timely. I mean, that itself will mean that we keep looking ahead, looking forward in a very positive manner to whatever plans they have. And I think from the sentiment viewpoint, I think there are a lot of talks around the taxation front on the equity, long-term taxation and those. I think not creating any negative sentimental impact will be a good thing for the markets, is my thought.
I was going through your top holdings as well, Vinit, and if you would permit me to make this one observation, which is that, and some people say that this sector could be the dark horse of 2023, pharmaceuticals. But I do see that in your top holdings, it's conspicuous by absence. Are you in wait and watch mode, or are you one of those who doesn't believe that it's going to be the year of pharma?
No, in fact, I don't know which portfolio you are referring, but anyways, the point is that overall, if we look at across our funds compared to the benchmark, our exposure is higher than the benchmark in the pharmaceutical segment, and it has been so for the last 1 or 2 years. And our stance is that we are positive on the pharmaceutical sector from two viewpoint. One, I think the growth, cash flow generation potential of the sector is pretty good, and the valuations are also quite reasonable if we compare the last 5 or 10 year and look into those. So I think from that perspective, we are definitely positive on the sector. And like you said, maybe there is definitely we have seen that the sector has gone through its own challenges in terms of lower margins, profitability, US business. So I think these are the things which we keep watching, which maybe keeps us on the fence in terms of adding more to the exposure. Probably once we have some better insights into these issues waning away, then I think we will be more confident of maybe increasing our exposure here.
All right, Vinit, we'll let you go on that note. Thanks much for taking time out and joining in, sharing with us your market outlook.